Egypt launched its privatization program in 2022 as it tries to sustain an economy facing an acute economic recession, shortage of hard currency, and spiraling inflation caused by the fallout from the coronavirus pandemic, followed by conflicts in Ukraine and Gaza.
It's very beneficiary for both the economy and for the public that we privatize and we offer our companies, because that means, first of all, these companies should do better with proper management. It will be run more efficiently. And of course, by selling the assets also, we are going to have foreign currency coming in, which we're in dire need of, and that will of course trickle down to workers, employees.
The plan is to rake in $40 billion from state asset sales by 2026. With a diversified economy, the government is exiting from over 35 companies from 9 sectors. The offerings are through direct sale to investors, partnerships with the private sector, or IPOs in the stock market. It's a long list of assets from sectors like oil and gas, fertilizers, renewable energy, hotels, banks, food and beverages, and public transport.
The assets to exit are chosen based on the profitability and growth prospects for each and where the private sector will be able to make good results. The government's role is to provide the proper regulations and climate for businesses to flourish.
The long-awaited IPOs would have given a boost to the Egyptian stock exchange. However, the recent rise in FX black market has postponed most sales till 2024 because of differences over evaluation of assets.
The problem now with the IPOs and the offerings that the government is going through, it's not still clear whether there's going to be another devaluation or not. So this is putting off investors from investing in case they buy now the assets at one price and then the currency is devalued later on.
The government had announced a set of incentives to encourage foreign investors to tap the market, such as tax breaks and a golden license to facilitate establishing any business.
The government has also signed up with the World Bank's International Finance Corporation to help with feasibility studies, marketing, and to speed up the sale of the state-owned companies.
The biggest buyers so far are the Gulf nations led by Saudi Arabia and the United Arab Emirates.
The Gulf nations want to expand their economies that depend mainly on oil. We are viewed as a promising destination for investment. They will pump funds in quality management, in new technologies and modernizing industries, and will make Egypt more attractive to investors in other countries.
In 2023, the government was able to sell 30% of tobacco monopoly group Eastern Tobacco at $625 million, making it the single largest transaction of the program. $800 million worth of minority shares in Etitco, Elab, and National Drilling, $700 million on a portfolio of state-owned hotels, and the government stake of 31% of the top steel group in the country, Aziz Dakhila. Going into the new year, investors are bracing for the profitable military-owned water bottling and gas stations companies, as well as the huge Jebel Al Zayt wind farm, to be released in the first quarter of 2024. Yasser Hakim for CGTN, Cairo, Egypt.